Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. In yesterday's video, I outlined two possible paths for Bitcoin, one pointing toward 106,000 and another retesting the 100.8,000 zone, with a slight bias to the downside. Over the past 24 hours, Bitcoin followed that lower path exactly, dipping to 100.8,000 before finding solid support and bouncing upward. For the first time since the start of November, and we're already a week in, the money flow has turned green again. Price has climbed from the recent low of 100.8,000 back above 101.6,000 and now sits near 102.2,000, with potential for further movement toward 103.4,000. If Bitcoin can push beyond 104.6,000, a level that's acted as firm resistance for several days, then 106,000 could come back into play. Reclaiming levels above 104.6,000 is crucial to avoid forming a sequence of lower highs. Bitcoin needs to show strength here, and so far that remains possible. It's not just Bitcoin showing signs of strain. The S&P index, representing large-cap stocks, and the Russell index, which tracks smaller companies, both dropped between 1% and 2% over the last 24 hours. These indices move on vastly different scales, but the correlated sentiment highlights the broader caution we're seeing across risk assets. Now let's take a look at the heat maps. On the one-day view, the most active area sits near 104.5 thousand. The three-day view shows a similar setup, with concentration around 105,000. While the weekly heat map highlights two strong liquidity pockets, one around 105,000 and another higher up at 111.7 thousand. These levels could act as near-term magnets if price strength continues to build. On the Bitcoin spot ETF side, the latest data finally shows positive momentum returning. Yesterday marked the first net inflow day in 10 sessions, totaling around $239 million. Most of that came from the three major issuers, BlackRock, Fidelity, and ARK, with Bitwise adding about 5.5 million. None of the other funds showed significant activity. Overall, sentiment remains cautiously optimistic. The short-term pressure from the recent dip hasn't completely faded, but the broader structural factors, including regulation, technological progress, and growing adoption, continue to suggest a constructive long-term direction. No major ETF outflows or geopolitical shocks have been recorded in this period, giving the market some breathing room. I'll continue updating you daily. Join the free Discord for real-time insights. Thanks for leaving a comment, it really helps the channel. Click the like button if you got value from this video. Subscribe and turn on the notification bell to stay updated. And see you in the next one.